Welcome to the Business Outlook Survey press conference call. My name is Doug Bennett, Media Relations Intern at the Federal Reserve Bank of Philadelphia, and with me is Mike Trebing, Senior Economic Analyst, also with the bank. Today we will take questions from reporters about what our manufacturers had to say about business activity in August. First, Mike will give a brief summary on today's report. Mike?
Thank you. Our survey of regional manufacturers for August suggests that conditions continue to weaken, but the broadest survey indicators for general activity in new orders, although still negative, improved from the readings in July. Employment among the reporting firms continued to fall off slightly, and more firms reported declines in average work hours than reported increases this month. Our price indexes suggest generally a slight increase in prices for inputs this month, but manufactured goods prices remain generally steady. The future indicators reflecting the firm's outlook over the next 6 months diminished somewhat again this month, but overall continue to suggest that firms think business will pick up over the next 6 months. And this month our special questions address the impact of seasonal factors on production and the prevalence of plant closings over the summer. And overall, we did not find any evidence of patterns that were remarkably different from previous surveys, and the plant closings this year were not significantly greater than in the past.
Thanks, Mike. We will now take questions from reporters. Stephen Joyce, BNA.
I've got 2 questions. The first is, I'll ask and then I'll wait for Mr. Trebing to answer. The first is on the jobs. The indicators, as you mentioned, for this month deteriorated somewhat, but the 6 months ahead improves. And I was wondering if you could give us a little flavor on what you heard from businesses regarding the jobs outlook.
Mm-hmm. We got about 35 comments from the firms this month, and none of them were really addressing the employment situation. Most of them talked about general conditions in their industry, and yeah, we've seen some negative numbers in the employment indexes over the last few months, and where we had positive growth earlier in the year. That seems to be reflected also in our employment numbers for the 3 states, where we've seen some slowing in the employment picture for the manufacturing sector. On the 6-month forecast, we had a little bit of a deterioration, I guess, but still, about 20% of the firms expecting to hire over the next 6 months, and closer to 9% expecting to decline. So not as favorable as we had earlier, but still on balance, it's following with the overall 6-month forecast where they're expecting growth.
Okay, that leads me to my second question, which is sort of the 6 months ahead. Mm-hmm. Generally, it seems to me, as you mentioned in your analysis, that there hasn't been there has been a little bit of deterioration, but it still is better than the current snapshot. And in the New York Fed that was released yesterday, the outlook was sort of across the board negative.
Right.
Do you think that there's sort of this, this frustration maybe, or some type of a fatigue maybe with these 6 months ahead outlooks, because there is a deterioration when in the past they've been sort of markedly better than the current month snapshot?
Right. We like to look at the 6-month forecast just to give us, an overall appraisal of expectations. They're not really strong numbers, so we like to read it as continuing to expect positive growth, but maybe not the rapid growth rates that they would have expected in the past. With regard to New York, I know our numbers have more or less converged this month, but we're still on the current side at least, our employment numbers are a little bit different than theirs, probably reflecting the industries that we survey. But on the employment numbers, we're showing some declines in the survey group and in our state. However, they're showing still continued growth, despite, I think, their overall declines in broad indexes this month, if I'm reading their numbers right.
Right, but for instance, if you look at the top line of the Philly Fed, you go from, your diffusion is 12.5 for 6 months ahead, which is a decrease from the previous month, and I believe it's decreased from June as well.
Right, we've seen.
What does that tell you?
Yeah, we've seen 2 months of deteriorating numbers. Although still, I'd point out to look at the details. We still have twice as many firms. Well, we still have a good share of 35% expecting growth in activity and
right.
about 23% declines. And the share of firms expecting increase last month was about 37%. So just a slight dip.
Okay.
With an increase of just a few percentage points on the decrease side. So those are fairly close numbers when you looked at the sub-detail. But still, the overall index has slid a little bit over the last few months. But the positive numbers still suggest that they're not expecting the declines that they're currently seeing to continue.
Thank you, Stephen.
Thank you.
Mm-hmm.
Kathleen Madigan, Dow Jones.
Did you get any indication from the responses what is driving the increase in prices paid, since we saw a similar gain in the New York Fed survey?
No. We were thinking that maybe food prices or some of the commodity prices, but we didn't get any comments on prices this time around to give us any color on that.
Okay.
And the industry breakdown didn't give us much of a leeway on that either. So they're still not as positive or not as high as they were, say in the first quarter, but they did bob up this month compared to last month.
Mm-hmm. Thanks.
Mm-hmm.
Any other questions? Stephen, Kathleen?
For me.
All right, thank you. You have just been watching August Business Outlook Survey press conference call and commentary with Mike Trebing, Senior Economic Analyst here at the bank, and myself, Doug Bennett, Media Relations Intern. Next month's Business Outlook Survey will be posted on our website on Thursday, September 20th at 10 a.m.